and welcome to another Major Market Movements End of the Week Market Review for September 11th, 2015. I'm Quad G, and in this video we're covering the peripheral markets, the equity markets, the crude oil market, and the treasury markets. Starting off here with the Dow, I do think that we've got an initial impulse down right here, standalone, and we're working on a wave A, it looks like a wave B, and now a wave C going into early next week. I could come up here and maybe fill this little manic drop right here, maybe up into the mid 16,000 level, and then from there perhaps turn right back around and start diving down into a third wave to the downside, which should have a little problem. May move out to an hour. If true, it should have a little problem coming down here to test into the mid 15,000 range or possibly even lower. The price, the 20 DMA has done an amazing job of capping this current decline a few times now. It's come up, the price has come up to test the 20, which is the green line there. Come up to test it, and then it falls right back down. So we're running into that resistance again at this moment, and it could be enough to cause it to turn over. This isn't the one to do it on. On the weekly, we pretty much have just an inside positive week. Nothing too exciting there. It's neutral. The EWO does not have a positive divergence set up yet. I'm expecting at least one more lower low in the price, probably down into the 14,000 level, and that could set up a positive divergence in the EWO. Same with the RSI, no positive divergence. Could see another drop to the downside, lower low, to set up that divergence. The weekly MACD is wide open to the downside, and on the daily, we're turned over to the upside just slightly there. So overall, neutral to bearish picture here for the Dow. I do think it could turn around here fairly soon. It's just working on a classic rounded dead cat balance, I think, and which just takes time for it to roll over. Let's take a look at crude while we're here. So crude oil had this pop up, and it looks like it's consolidating downwards and sideways into some kind of flag or triangle pattern consolidation, which should lead to at least another thrust higher, possibly up here into the $52 level or even higher. As an ABC move is what I suspect. This correction may not be finished yet. We'll go into more detail here in a moment. The 20 DMA is the blue line there, and then the black line is the 3 EMA. And you see that this is the 4-hour. I want the daily, excuse me. You can see that on the 20 DMA, it is providing some support as it turns around and starts to move up. The sideways choppy action continues to chop, closing the days above and below the 3 EMA. So no, again, that's very neutral, no solid direction. The week is just the inside negative week. It's neutral. Still have the positive divergence on the EWO there. And the RSI, we're still, looks like the 60 level did provide some resistance. We're pulling back inside in this mushy area between 40 and 50. The MACD is open to the upside on the daily. That's bullish. and the weekly is somewhat neutral. It's technically open to the downside, but very close to just being neutral there on the weekly. So overall picture for crude oil is, I think it's building up a bull flag of some sort. It's not quite finished yet, and once it's complete should allow for another impulsive move to the upside, which I think should be able to reach up to 52, maybe even higher. Let's take a look at these charts. Start with the YM. Still working on this wave 4 sharp, which I think is complete. We got a wave 1 down and we're working on this wave 2. And I'm going to zoom in here a little bit closer. We got a breakdown point at the end of B there at 16,151. And I think we're currently working on wave C to the upside. And it may or may not be finished yet. There is a chance that it could continue up a little bit higher, possibly to fill in some of this manic drop up here in the mid 16,000 level as a wave 2, and then from there start the next plunge. Obviously, a drop below 16,151 would suggest that wave 2 is finished and wave 3 is underway. Also working on this rule of 4 breakdown. It's very close to being defeated or starting to roll to the downside, but not quite there yet. So the NASDAQ, working on this wave 4 sharp. I think it may be completed with a double zigzag to the upside to go and alternate with the wave 2 flat previously, and now wave 5 to the downside. And I think that wave 2 is complete or nearly complete. Maybe early next week might see a little bit more upside, fill in this manic drop, and then turn around and start dropping into wave 3 of 5 to the downside. Key resistance is at 43.70, of course. Break above that and it throws off this count. So looking at IWM here, which is the best intraday chart I can get to reflect what's going on with the Russell 2000. And what I see here is we had an ending diagonal count to the upside. It was finished. Now we're starting the impulsive drop that should completely retrace the ending diagonal count all the way down to its origination, which was down here at 103. So we still got a ways to go yet. Certainly could drop much further than 103. It could go well beyond that, but 103 is a reasonable target for such a move. And wave 5 here wave 4 here looks like it's finished. And we're kind of caught between this orange trend line and this pink trend line. I think the orange could still hold, and a drop below the pink should get the ball rolling to the downside. The blue trend line is also a very key level of resistance. We start breaking above that, that throws off this count, or it may not throw off the count necessarily, but it would put it in jeopardy, I should say, making it in trouble of being broken. Obviously, the red line here, horizontal resistance, is a key level of resistance, which with a low of 117.97. So get a break above that, and it kills this count, and we got something else taking shape. The best I could see is this is just a three-way move to the downside if that was to happen, and no impulse. But I'm still favoring the impulse to complete, which has a few more waves to the downside yet to go. Looking at JPY here, I've got a couple ideas here. It looks like we got a wave 1, wave 2, wave 3, and we're working on Wave 4 could have ended here, potentially, and you're just working on a sub 1, sub 2 of maybe a long drawn out ending diagonal count to the downside. That's a possibility. The other possibility is that we've got another flat here. So we don't have any alternation, it's just a flat. 4 or a sub 2. So we could have wave 1, wave 2, sub 1, sub 2, and a 3 to go. But, could it be just a no alternation wave 4 as another flat? That's a possibility as well. Whatever the case, the key point of resistance for this count is at the top of this wave with a high of 1877.41. So while the market's below that level, I suspect we'll continue to see some more downside action. The other thought I have here is because of this choppy nature with it, wave A, wave B, wave C, this could be a wave D to the downside, maybe a pop-up into wave E as a contracting triangle possibly. And then once that's complete, then we see another thrust to the downside. Something else to watch for. But again, even with that count, key level resistance is right up here in the 18,700 range. All right, BKX still expecting more downside, while below 75.90, and actually 73.06 is what I'm counting on as resistance right now. There is, I didn't point it on here, but I'll paint it up real quick. We've got this supporting trend line also. It's a key level of support. It's been tested once, twice, 3 times. So possible rule of 4 breakout to come, to be seen there. Also, I want to go back here to YM and go to the daily. And I just want to point out how when the stock market makes tops, they're often very choppy and roundy like this. So it's no surprise that this bounce up is also kind of choppy and roundy as it moves to the upside. So let me go back here to 2008. Again, you'll see that, come back here. This top here comes up, kind of choppy and roundy, then falls down. This top also comes up, chops sideways, and then down. Kind of a rounded action. And then this is one of the better dead cat bounce. Comes down to a bottom, bounces up, rolls over, and then right back down. And then here's another perfect up, rounded, over, and down. The stock market is resistant to downside action. Investors like the upside more than they do the downside. So that's one of the reasons why you see this choppy sideways rounded behavior is you've got investors coming in trying to find a good place to get in for what they think is going to be a large shot to the upside, which eventually doesn't play out. So as the move goes up, they're starting to load up, and then as the market starts to make lower lows counter to their positions, then they start to back out until it's panic time, and then usually they just let it all go. So that's what I'm expecting to see with this action. It's just go back into the 2-hour. It's just an up and rounded action like this. And eventually, as you start taking out these other swing lows, once you get down to here, then all the long side positions that got put in above this level at 15,291, right about that time, everybody panics out, and then you get a large drop thereafter. So that's my expectation with there. Let's take a look at oil. Again, here's the other wave count that I'm favoring at this moment. Is we got a wave A up, and then A, B, C, larger C than expected. And then I think we'll get a D wave up, and then an E, over the course of the next several days, and that should complete wave B. And then when B is finished, it should give us another impulse to marry up with wave A here, and it should be a wave C, which I think has potential coming up to 52, maybe even higher. All right, I had a request for take a look at UVXY, and here's what I see going on right now is you got this trend line, and the market is just hovering just below it, putting some pressure on that line, and so I think once you get a solid close above that, especially on a daily basis, that could be the start of the next impulsive wave higher. The previous congestion right here, right around the 55 range, is another level that could lend support with any further downside move. The other trend line here that you should pay attention to is this guy right here. You don't want to see the price move much beyond that trend line, or else you might see a bigger drop. Of course, this is a derivative several times over away from the real market. So you really want to be timing UVXY with buying UVXY when you're looking to short in the main markets, the indexes. That's how I would tie them together, and they should move together relatively at the same spot. Maybe different patterns, but they should turn relatively at the same time. Here's VIX proper, and I do think I've got the Bollinger Bands on this, but I do think that the price is coming down. This is a breakout point right here, just a gap up. So the market could be calming down here, trying to go into a back test this breakout point, where it's right around the 20 level. Maybe fill in this this crazy manic action to some degree before taking off yet again for another shot higher. And if the market is working on a wave 5 to the downside, it's very likely that the VIX will not exceed this extreme way up here. It might meet it, but it may not exceed it. This wave 3 thrust in the market is rarely ever exceeded on a wave 5 move in the market, according to the correlating with the VIX. So yeah, watch for that. If the market starts dropping off again and it looks like it's just going to be a wave 5, very likely that this move may not exceed this top right here. It might meet it, but not exceed it. All right. Let's take a look at the 10-year note. Here's the short-term count. Here's a significant wave 2. I think we got a wave 1 to the downside here. We got a wave A, a wave B, and now we're working on a wave C, which could be a 5-wave move for a 335 flat. We might have a wave 1, a wave 2, working on wave 3 up, maybe a sideways wave 4, and then another little push up into 5, maybe back test that orange trend line, maybe put a small incremental move above A, so 128.17, maybe slightly above that. That could finish the 5-wave move for C of 2, and then I think we'll start to see wave 3 to the downside. Okay, that ends our coverage of the peripheral markets for this week. Again, I hope you all have a great weekend, and I'll talk to you later. Adios.